Hey guys, what's going on? It's your big dreamer and doer, G Dinero, coming to you live to break down the trade. But first, remember, none of this is tax, financial, legal, or investment advice. This is your buddy G Dinero helping you increase your financial literacy to help set you and your family on that path to financial freedom. So let's dig right in. So this is breaking down the trade that James from InvestAnswers did yesterday. So yesterday he did a pair trade, but it wasn't your everyday run-of-the-mill pair trade. He pair traded MicroStrategy to Tesla and did so because MicroStrategy's price was spiking while Tesla's was actually staying stagnant, if not pulling back just a little bit at the time. So as he says here, he executed the sale of his second tranche of MicroStrategy today at an exchange ratio of 1.03 MicroStrategy per Tesla share. So prior to year end, he had unloaded 1/40th of his position. He did another group of those today. And for every 100 shares of MicroStrategy that he sold, he took those proceeds and deployed them into 3 synthetic long positions on Tesla via options. So he gained this entire position to begin with by doing synthetic longs on MicroStrategy. He did them at the rock bottom of the 2022 market, went ahead and exercised those into shares back near the end of last year, or maybe the beginning. I think it was the beginning of 2024 when he 2025 when he actually exercised those into shares. Now he turned around and sold those shares today and entered into a synthetic long on Tesla. Every 100 shares of MicroStrategy he sold, he did 3 280 June 2027 Tesla synthetic longs. So he bought a call and sold a put for the 280 strike price for a net debit, he says, of $25 per 100 shares sold. The break even on this trade is 305 by mid-2027, a whopping 835 days until expiration. And he said he thinks that he was most of the volume that was done today. At the time, Tesla was at 280 and MicroStrategy was at 390. I think that's a typo. It was actually at 290 at the time, 290. And the reason that I say it's a typo is because I went back and looked and MicroStrategy hasn't been up at 390 for a while now. So just to be clear on that. So he amplified. So for every 100 shares of MicroStrategy that he sold, he increased his exposure to Tesla by 300 shares. And again, did that through a leveraged options position in order to balance out his portfolio to more of a 50% weighting on Tesla, which has been his goal all along. So let's take a look over here and see when he executed the trade. So what I have here is a pair chart. I have on a few of the IADSS indicators. I have on confluence, trend, and mean reversion. I do have the confluence turned on twice. And what you'll note is that the pair was spiking out of the top on a 4-hour chart, spiking out of the top of the cloud at the time that he put the trade on. I did this screenshot today, and it's gone up even higher since he made this trade. So, but in the meantime, what you'll see here is it was at a ratio of 1.03. What does that mean? That means that it takes 1.03 Tesla shares to purchase one MicroStrategy, or for every one MicroStrategy you sell, you would gain 1.03 Tesla shares. So this is a classic pair trade. If you were just doing it based on shares without options or anything else, for every 100 shares of MicroStrategy you sold, you would be able to buy 103 Tesla shares, 103 Tesla shares, okay? But that's not how James did this. What did he do? He sold the 100 shares of MicroStrategy for around $290 a share and collected $29,000. That's $29,000. He then sold the June 17th, 2027 Tesla 280 put for about $83 a share. That's what it was going for a half an hour before he put out that trade alert. So I'm guesstimating that that was right around the time that he did the trade. So he collected $8,300 and it used up $28,000 of margin to secure or collateralize the put. What does that mean? There's an assignment risk. If for some reason Tesla is below 280, he could get assigned the shares and have to buy 100 shares of stock at $280 a share. And that assignment could happen at any time between now and June 17th, 2027. So during that entire time, he has to have that buying power. That could be in the form of cash, or in his case, in the form of margin, due to all of the equities that he's already holding in this particular account. He then bought the June 17th, 2027 Tesla 280 call for around $108 a share and spent $10,800. So that resulted in a net debit of $2,500 or $25 a share. Now, again, what's he looking for with that call option? Well, the call, if Tesla closes above 280, will be worth the face value of the call option. Let's say Tesla's up at $600 a share. 600 minus 280 is 320. That's $32,000 that the call would be worth. If Tesla closes below 280, he's out the entire premium that he spent on that call option. Okay. What's the break-even price? How did he calculate that? It's simple. You take 280, you add $25 to it, and you come up with 305. That's how he came up with that as the break-even price. This is what the trade looks like when you enter it into Optionstrat. Optionstrat's my preferred tool for entering in the trades. You'll note that I put it in as a 280 synthetic long with a net debit of $2,500. Remember, he said he did 3 of these for every 100 shares of MicroStrategy that he sold. So that means it cost him $7,500 to put the trade on if he did 3 of these instead of 1. You'll also note that if Tesla goes to $600 a share by June of 2027, that was the example I just gave you a moment ago, the puts will expire worthless, releasing that collateral that's there. Again, remember, each one is collateralized by $28,000 in the form of cash or margin. So that would be released because the put would expire worthless, and the call option would be worth the pure intrinsic value. So that's 600 minus the 280 strike price is 320 times 100 shares is $32,000 minus what he spent on each of these contracts, which is $2,500, equals a profit of $29,500. But remember, he didn't do 1, he did 3 of these. So essentially, it would look like on paper turning $7,500 into $90,000 of profit, or basically turning it into $96,000. So taking $7,500 and turning it into $96,000. Not too shabby at the end of the day. If you like what I went over here with you, be sure to check out my website where you can book a course with me at gdinerocoaching.com. Like this video. Comment, tell me, what'd you like best about the video? What could I have done better? And lastly, make sure you're subscribed so you can see more videos just like these. Remember, this is me helping you increase your financial literacy. So here's to increasing your financial literacy so that you can set you and your family on that path to financial freedom. I'm G Dinero signing out for the day. Have a wonderful afternoon. Take care.